Hi, I'm David Bodemer, the editorial director with National Real Estate Investor, here with Peter Lewis, who is the founder and chairman of Wharton Equity Partners. We're here at the Strategic Real Estate Investment Conference. Now, you're going to be speaking on a panel in a little bit about alternative investments. You've also been in this business for about 25 years, and I guess one place we'd be good to start is, can you talk a little bit about the evolution of capital? Maybe tell us a little about what you guys do, and then how that relates to raising capital for the business.
So Wharton Equity Partners is a firm I started 25 years ago. We started as real estate developers.
Okay.
During that era and to this era, our primary source of capital has been high net worth individuals. So we're very in tune with the needs of those types of investors. In 2008, when the world imploded, things changed, and I think changed probably for a long period of time going forward, where that capital today, high net worth and family offices, want to be very close to their sponsors. They want strong operators. There was a confidence shakeup, I think, between capital and sponsors, and that's perfect for us because what we do really well, I think, is court and kind of manage those relationships. So, we're kind of thrilled with where we sit right now as far as the type of capital that we go after.
Can you talk a little bit about family office real estate? I mean, that's sort of a new thing to me. I wasn't so aware of this concept of these things called family offices and the way they're doing estate planning and all this stuff. So what is it like to work with?
Well, we don't really get involved. Family offices, everyone can have one today, but we really try to focus on family offices that are smaller and where the entrepreneur is actually involved. We don't want to get involved with family offices that are institutionalized. Our real strength, since we're entrepreneurs, we're operators, we also have a private equity business where we invest in companies and back entrepreneurs. We know how to deal with entrepreneurs, and so we like that kind of relationship versus a more structured relationship. I think the idea today of family offices is kind of overblown. I really would kind of just say that we're really more in the ultra high net worth. It could be guys that are hedge fund guys, for example, who have no exposure to real estate, which is really surprising. Many don't. It could be guys working on Wall Street. It may not be the Rockefeller family. There's a whole world of guys out there and girls who are being left out, and that's really where I think the opportunity is for firms like ours.
And where do you see the best investment opportunities? What's your strategy right now for?
Because we have a private equity business, the firm looks at real estate in a different way perhaps than others. We really look for trends. We look for big macro trends, and then we look for micro trends. So for example, right now we just bought $100 million worth of multifamily properties. We are big believers in multifamily properties, particularly in some of the secondary markets where cap rates haven't dropped yet. What we believe is that capital, which has been migrating ferociously to the primary markets, cap rates have dropped down at a crazy rate. And what's happening is people are scratching their heads saying, I can't live with these kind of yields. Where else can I go? And our role in life is to try to be right ahead of the curve. So we bought some stuff in Florida, which we like with OXIF. We bought some stuff in the Midwest. These are 7+ cap rates. We put on government debt. We're enjoying, let's say, 8 to 12% yields. And that's a space we like. We've seen already in those markets cap rates drop. I mean, our biggest challenge is going to be what do we do next? Right.
Because as other people migrate in, then where do you find the next opportunity to get the?
But they're there.
Yields?
We also look at themes. So I was talking before about that's kind of a micro thing when you see where capital's going. On a macro level, we love universities, not just student housing. There's biomedical around those schools. There's obviously laboratory and all that related things. We love port cities right now. Savannah, Charleston, the Panama Canal opening up, trade in general starting to come back to life. We absolutely are crazy about South Florida, Miami market. And I'm not talking about buying condos in buildings. We're talking about the other stuff down there. So, we think in the years ahead, there are certain things that are going to happen. Urban markets are making a major comeback, not just New York. but other places that have 24/7 lifestyle. So we try to invest in things not only, like as I mentioned before, where capital isn't, but also where we think the future growth is going to be. So we look at the world kind of at a very, like 360 degrees.
And is there anything out there that gives you any pause or anything that you're concerned about that could alter the...
I think what I'm seeing right now with multifamily is scary.
Okay.
Cap rates have to go up. Interest rates will rise.
Right.
What we're trying to do for us is put on longer term debt. We really don't want to deal with less than 10 years. The deal we did in Chicago recently, we had 35-year HUD debt.
Okay.
So we're worried about rates going up. And what scares me more in dovetailing with that is I'm not sure we're going to see the increase in rents. I think we're going to move into a deflationary environment. Okay. Where traditionally inflation and higher rates, interest rates actually follow, rents would follow. I'm not sure we're going to see that. So we're going to get a double impact where cap rates go up, cost of borrowing goes up, but rents don't rise. And a lot of these deals today, particularly in the Southeast, that you have to see 5% rent increases a year to make it. To me, it's 2006, 2007. It's crazy, and we didn't do it then, and we're not going to do it now.
Well, thank you so much for taking some time to give us some insights.
Appreciate it. Thank you.
And continue to watch our videos from the Strategic Real Estate Investment Conference.
Look forward to it. Thank you.